Hello again, welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thanks so much for tuning in. Really appreciate it. Just a little housekeeping. This is nothing in this video is intended to be investing advice. I am not a financial advisor, and this is not financial advice. Always do your own due diligence when investing and take responsibility for your own choices. Skipped a couple of days of the Uranium Market Minute this week. I was on the road. Good to be back. Looks like the uranium sector is kind of chopping sideways, couple of down days, couple of up days. Today is looking pretty promising, especially considering that the broad market is down substantially. So we'll take a look at the charts in a minute here. But before we do that, let's get into the daily scoreboard. Spot price of uranium this morning, $43 a pound mid-market. It's been drifting down in the past week or so. Last week, we had a big down day on Friday. It dropped about 10% in a single day. However, this price movement is on relatively low volume. We had a good up day the other day when SPUT came back into the market. But this is really typical during the end of the month. Obviously, last month, that was an exception because SPUT was in the market so heavily. But there's a number of uranium traders that have offtake agreements from producers. And those agreements are reset each month based on the previous month's closing price. So oftentimes towards the end of the month, those who are on the receiving end of those pounds, the traders will manipulate the market a bit, try to knock it down, sell some cheap pounds in the market to get that spot price down prior to the month end price to affect what they will pay in the forward month, if that makes sense. So nothing really concerning whatsoever here in the spot market from what we're seeing. These are all very low volume trades, very low volume purchases when we went up on huge volume and down on small volume. And that's exactly what you want to see in the charts as well, as you want to see those rallies, big volumes come in and the selling on lower volume. Let's see, SPUT, they took in a nominal amount of investor capital yesterday and didn't purchase any uranium. They closed the day at 1.1% discount to NAV. So as I've mentioned many times before, they basically need to be above a 1% premium to NAV in order to issue shares into the market because they have a 1% fee when they purchase uranium. So it doesn't look like there's going to be any money raised today. However, they did close yesterday with 9 million in cash. So perhaps they're doing a bit of buying. We'll have to see. Since the 17th of August, which is when their ATM first went live, the ATM is the at-the-market financing vehicle that allows them to issue shares into the open market. They'll do so whenever they're north of a 1% premium to NAV, and they will not go above 50 to 60% of the daily trading volume. So when we have big up days in that trust and they're more than a 1% premium to NAV and there's a lot of volume coming to it, they can just issue shares like crazy. They've issued more than $50 million in a single day over the past 6 weeks. That happened. That was the biggest day, but they've been very consistent whenever they're at a premium to NAV. So for now, they're likely still at a slight discount to NAV here. So probably not any more shares issued. The ETFs. So we have a section in our newsletter called the Flywheel Effect, and we discuss the ETFs and how they essentially act as a flywheel in the sector and in many sectors really, but in uranium in particular because it's such a small universe. Such a small number of stocks, and the ETFs are substantial buyers and sellers in stocks. So when money comes into the ETFs and they issue new shares, they can be pretty big buyers. So URA reported 330,000 shares of new issuance. URNM reported 450,000 new shares of issuance. And we're seeing that in the markets. The uranium stocks the past couple of days have generally had a little bit more support. It seems like they're finding kind of a bottom after the selling. These two ETFs have a combined AUM, the assets under management, of just over $1.5 billion. And they've taken in almost $400 million this month in September alone between the two ETFs. Let's take a look at the charts. Let's start off with URA here, Globalx Uranium Etf. Now remember, this is only 70% allocated to uranium stocks, but it's still the most liquid ETF and the largest in terms of total market capitalization. So we like to look at that to kind of determine where the sector is going and as an overall signal for the sector. So we can see since the sharp rise with big volume that started mid-August, the selling volume has been decreasing, and that's really good to see. And actually, if you look up at the past week, we've been in a pretty tight channel here between about 2450 and 2250 roughly. So chopping back and forth up and down on that, it's looking like the MACD is trying to find a bottom here. Not a bad looking chart overall. It doesn't look like we're really seeing a harsh follow through on this, what appeared to be sort of a head and shoulders pattern here. It's not looking too bad in my opinion. All the moving averages still moving up, which is very clearly in a bull market. Same thing for URNM, a little bit of a better chart than URA. Hasn't even come down to this, previous resistance point that could end up being support. Still well above the rising 50-day and 200-day overall bullish chart. Again, declining volumes on the selling, increasing volumes on the buying. Exactly what we want to see. So far, this is looking to me to be a really healthy overall pullback in the uranium sector here. Always like to look at Cameco. Cameco having a great day. And it's really good to see these green uranium stocks. I mean, energy is just getting a lot of love here, and the broad markets are down substantially. So before we look at Sprott Physical Uranium Trust, let's take a look at the S&P. Pretty chunky down day, not as big as a couple of days ago, but still pretty nasty looking, rolling over a bit here. So to see that and to see the strength in uranium is very encouraging. The Sprott vehicle, like I said, not much happening here volume wise. It does look like we're trying to find a bottom here technically, and we're in a tight little channel here. It's actually looking like it's making a wedge here. So that's likely going to break out in one direction or the other. We still potentially have a gap to fill down here, but again, in some cases, technical analysis is not really all that appropriate for this particular vehicle, because what we're really talking about is where it's trading relative to NAV and relative to the current spot price. And the spot price is seeming like it's finding a bottom in that $43 range. However, this is the last day of the month. We could see some effort to bring that spot price down, but we'll have to see about that. I'm not going to do a mailbag today, but if you'd like to, please add some questions in the comments below. And while you're doing that, like this video, subscribe to the channel if you haven't already, so that you can get notified whenever we release an episode, which is just about every day. Overall, it's looking like we're finding a somewhat of a bottom here technically. There's slight correction that began a little less than 2 weeks ago, trying to shake out some of the hot money that came in at the very euphoric highs of that previous run, and some of that exuberance gets kind of shaken out, which is always good. These sentiment resets are really actually healthy and to be expected in these resource markets, especially. When we look at these stocks, every week for Uranium Insider Pro subscribers on Sunday evening, I update what's called the weekly watch list, and we go over all of the stocks that we recommend and hold, and levels of support to look for, levels to look for if you're still adding to your positions, which in my opinion now is probably a great time to add positions if you're not already fully positioned to the extent that you want to be. And remember, uranium is very volatile. Never recommend putting all your eggs in one basket. It's good to diversify across sectors and within the sector. But every week that I do this update on Sundays, and the last couple of weeks been doing a video update to go through the charts a little bit more thoroughly and try to pick some points to look for some pullbacks for our members to add to their positions, and for ourselves to add to our positions as well. I am going to mention something though that's been in the news, which is this seemingly global energy crisis. It's quite the thing. It's really hitting Europe hard. It's hitting China hard. I heard that 1/3 of the petrol stations in the UK are out of gasoline. China actually issued, there was an article in Bloomberg this morning, and Art Hyde on Twitter. If you're on Twitter, you don't already follow Art Hyde, please do. He's a managing partner at Segra Capital, and they're a uranium focused long and short fund. And Art is just a good guy and really, really sharp. He really knows his stuff in this space. And he shares pretty generously on Twitter. He shared an article from the Bloomberg terminal that Chinese officials are calling on the state-owned energy companies to secure supplies at all costs. And obviously, they're speaking directly about this coming winter and trying to make sure that they have the coal and the oil and the gas on hand to weather what's going to happen this winter, which is obviously going to be cold temperatures. And they have a huge population, and the reason that I'm mentioning this is because this crisis is also hitting. It's hitting all over the place. I mean, we have rising gas prices here in the States, um, and in Europe, one of the countries that's getting hit really hard is Germany, and they have all of these idled nuclear plants, and it's highly unlikely that they're going to reverse course. Politicians have a very difficult time admitting fault, admitting wrongdoing, and saying, "Oops, we messed that up, so we're gonna do right." So I'm not holding my breath on that. I actually don't expect it. I do expect that we could see Japan get more aggressive with their restarts. Japan geographically speaking, is a small country, not very resource rich. And the great thing about uranium, and we're going to expand on this much more in the upcoming newsletter, October's newsletter, which will be out Monday, October 4th, before the market opens. We do it the second trading day of the month because a lot of data comes in on the first. So Monday the 4th is the October letter. So if you're not already a subscriber and you want to catch that, that's coming out on the 4th. We're going to expand on this energy crisis situation, what it means for uranium. But really quickly, you can store an immense amount of energy in a very, very small area. Relative to oil or gas, I mean, it's unbelievable how energy dense uranium is. And so a country like Japan, it's a no-brainer for them to store. They can really have strong energy security by storing, fabricated fuel, enriched uranium, UF6 even, and storing that in spades and have decades of energy stored. China has done that. They were smart enough to go all out purchasing uranium in the previous decade, cheap uranium, primarily from Kazakhstan and some other places that were flooding the market after Fukushima. They have a lot of uranium stockpiled, but they're still out there. I mean, we've seen they just took out another JV with Kazatomprom this year, the Ordolik project, and they're always out there hunting for more uranium. And China is basically they're adding on average 9 gigawatts of nuclear every year this decade. So that equates to about 4 million pounds of new demand added every year, and they're only 5% nuclear. Nuclear energy is 5% of their grid right now, and it's the most stable, the most reliable baseload power, and they can store an immense amount of fuel in a very small space. So we think that that what's happening now in this global energy crisis, especially when it comes to oil and gas and coal, and how that can be so easily constrained by labor shortages and shipping constraints, that to be able to store an incredibly dense form of energy and secure energy for your country and for your citizens is something that is increasingly coming to the front during this crisis. So I hope everybody's safe out there. And I think that, one thing that we're really trying to focus on with our newsletter is capitalizing on this opportunity in uranium. And obviously, I think there's other opportunities out there in oil and gas, energy in general. And eventually, I think that the metals are going to have their day in the sun as well. But things are getting tough out there, and to the extent that we can get a return on our investments and make hay while the sun shines in the next couple of years and beyond, with what I think is shaping up to be an absolute face-ripping commodities market. That's really, I really hope that we can all do the best we can in this market and do the best for ourselves and our families and our communities and all of that. So on that, I'll say cheers. Thank you for watching. Again, if you have any questions for me, questions about uranium specifically, feel free to leave a comment below and I'll get to it in the next Uranium Market Minute, which will be tomorrow. All right. Have a great day, everybody. Bye.